Now, in terms of resolving a tax debt, be it long-standing, as in historic, or be it from the last financial period, the options available are a compromise of tax debt and a deferral of payment. So when we look at a dispute, just to draw a very quick comparison, a dispute provides very stringent timeframes which practitioners, attorneys, accountants must adhere to when engaging SARS and trying to resolve a matter on behalf of their client. The difference with the tax debt relief mechanisms, such as the compromise or the deferral of payment arrangement, is that they do not contain definitive timelines as to the period. So, for example, and this is again basically lessons learned, in that I've attended to a tax debt compromise where the liability goes back to 2004, and we were successful, ended up settling at was about 28% of the liability with interest and penalties written off in their entirety. And this is why in some instances, especially where the gripe with SARS is from a historic perspective, as much as ideally the taxpayer would want to dispute, they must obviously be aware of the stringent timelines in the dispute process, which timelines do not place a bar on the compromise or deferral process, just on the basis that they can go back basically as far as possible, just to bring the taxpayer up to speed and ensure that they are fully compliant with SARS, having settled or written off in part or in full their entire historic liability, and basically that tax compliance status on the taxpayer's profile e-filing should be all green with no little red blocks, in essence. So to set it out, let's start with the deferral of payment. The deferral of payment is a lot simpler to understand, and as I earlier mentioned, an example would be if a taxpayer had a liability of 1.2 million, the deferral would speak to the taxpayer paying 100,000 a month for the next 12 months, and this would then settle their liability. What the deferral does is it puts the taxpayer in a position whereby they have an agreement with SARS, which is actually a signed agreement and is legally binding on both parties. And in the event that there is a breach on the part of the taxpayer, that agreement may then be revoked. However, it must be noted that in terms of the debt relief mechanisms, these mechanisms do very much allow for the handling of interest and penalties in a more favorable manner than you would get in most other instances.